So really, what to say? Ides, Friday was big, wasn't it? Heading up. Looks like we're going a bit further. We're playing around at the moment on ES around big fat round number. That's going to be awkward, contentious. Lots of options, people, no doubt, fiddling about with that. We're consumed through a whole bunch of single prints from whenever that was, that down day, which was Wednesday, wasn't it? So we've nibbled through 2 chunks of them. Anything special about the third one? Well, we seem to be back in the recent range, say from 39.50 up to 40, whatever, 40.25. NQ, okay, there's some layers of supply above us around 11,800. We've already nibbled into those a little bit, though, previously. So big picture, we're going up. Question is how to take advantage of it and trade it. Well, that's what we do. Some poor structure on Friday's run up. You can see single prints below us, 77. That's interesting. There's 2 there, 77 down to 73, few below. Another batch, 61 down to 54. So I guess what'll be interesting when we open is do lots of people pile in? Friday closed up. I don't want to miss out. And are they going to be supremely punished by other people that slap them back down? So I'm going to be keeping my eye on this area of single prints above us up to about 40.15 and the chunks of single prints below us, 2 chunks, say 78 and then bottom around 55, because we can make a case for going either way. Overnight, not a price trajectory at the high, 20 contracts shy of it. Low, UB. A bit like, when was it? Thursday, wasn't it? I did the fishing trip and just sat on my hands. I'm going to wait and see what happens, which way we're going to go. We clearly had a run overnight, but there's no excess at the bottom. If I'm going to get long, I really want to get long from below where we are now, but there's reasons for us to revisit the high. That's what we're looking like at the moment. In terms of the calendar, it's last week of the month. Nothing jumped out at me as being especially significant this week. Let's just have a quick scroll through and a sanity check. On Tuesday, nothing there. Wednesday, oh, those Canadians, eh? Cool. Thursday.
I'm going to jump in and disagree with you. Tuesday, we have PMI, and that could move us a bit. And Thursday, we have GDP.
Yeah, Thursday, GDP pre-market. Yeah, PMI can cause a move on Tuesday. Yeah. So I guess what we've got to watch is top of the recent range, around 40.40. And, are we going to get there ahead of one of those 2 figures and then settle? And then we're reliant on those figures to break us further up or move us back into recent range. I think we will, gradually climb our way up. Look at how YM is lagging versus everything else. Yet intraday, a couple of times over the past week, it's led us on the direction. YM was lagging really heavily on Friday and then caught up. So it's worthwhile watching all 4. But we've had poor consolidation early in the session for a couple of days in the past week, which is most likely earnings related, given there's been stuff coming out. But that's kind of my view, creeping up.
The YM problem was Goldman. They had a bad earnings report, bad forecast, and that happened earlier in the week, and that it was beat up all week. So
because it seemed YM led us down, I think, on that big down day, which must have been that Goldman figure. And
that's what it was.
YM was dragged up by everything else, but YM was causing the lack of correlation.
An interesting comment about YM, just while we're on it, if you look at a daily view, it is the one that has bounced the most. In other words, it's the farthest up into its retracements. For example, right now, we're just at 61%, so we're right on the top of the ambush zone in YM, but the others have all struggled to bounce, 20, 30%.
Retracement from where, Jeff? So I remember putting retracements on these last week.
Here, I can just show mine if you want.
Yeah, let's do that.
Rather than you have to do it. Here, hang on, let me grab it real fast. Yeah, I just thought this was of interest. I've been watching this for a couple of weeks. So these are, just basic fib retracements this is 2 years of days. So here's the beginning of the downtrend in all four, and you can see, so it's just the top, the high to the recent low. And look at YM. Its bounce is almost half. It's more than halfway. The rest of them are struggling, more at the lows. ES is a little bit higher up, but that is significant because it's the only one that's truly broken the downtrend. But it also got beat up the most in the last week. See, if you look at just the last couple of days, the others have uptrends and it doesn't. So very interesting situation. Anyway,
that's interesting. I was retracing last week from around beginning of December. To look where things were relatively. And I think that's where it looked like, YM had gone furthest, I think, and then others were following. But that's interesting looking over a couple of years. Yeah.
Yeah, it really, well, it's still just the fib retracement from the high to the low. So that I like to look at that as just, how far have we bounced, answering that question. So one other just quick comment, Amy said something about it in the chat, and I totally agree. This is the biggest earnings week of the season this week. Last week we had a bunch of big names, but the volume, and I think Tom posted a nice graphic of it, what's before and the open and what's after the close every day. And it's huge. Just there's so many reports coming, so expect a lot of volatility just from that. And one other quick comment about that, just while I'm on this, and then I'll toss it back to you, Lee. We had the hedge fund call, and just one topic, and everybody was dialed in on this topic, and I was just kind of listening in carefully. This week, everybody thinks we will get a better understanding of value. Think about this for a second. Last week, earnings reports, we got shook up, we had the big drop, we bounced back up. This week, as you point out, Lee, there's not anything really major on the calendar. PMI, GDP, but next week is FOMC and NFP.
Yeah.
And that's going to shake it. Remember, the event-driven market, and that's everybody's philosophy at that size. And so this is the week to understand value, and next week we go back to event-driven. So
that gives us a couple of scenarios, doesn't it? We can spend the week and sort of hang out near an extreme of a range, and wait for the figures, although they start midweek next week, to push us back into value or find new value. Or we can explore where the edge of the range is. And, the dailies are quite good for looking at that. Look at those layers of supply on NQ around 11,800, for example. Yeah. And then we drift back into the middle and we're just going to hang around. So you've got to know where the range edges are on big picture for the week, 10 days.
Yeah, I totally agree with that. I mentioned to the people in the Sunday Reopen yesterday, and we also had this conversation on the hedge fund call, but we've had this conversation for weeks on the hedge fund call. This is a scalper's market. That doesn't mean, you can't trade structurally, but the kind of action we're getting is, this very sharp, sudden moves. And so absolutely key, the edges of the range, whatever scale you're trading, if you look at my screen, I'm working real short term. For example, there was a really good short there in NQ this morning on that pop up. We got to a real extreme, but it ran for a while. There's definitely a bid under the market. So you just, you can't really have an opinion. You have to let the market give you an opinion. I think that's the best way to trade this stuff. Certainly this idea, though, of finding value. We were all looking at the TPO view when we were talking about this. And, the argument is really interesting. We were at an old range, and, that Goldman came out and we got crushed right back down to the previous range. And then once that got priced in, guess what? We're right back up near the range that we got crushed from. And so it's just, you really have to be mindful that that's the kind of energy of this. Otherwise, you could really, really get off sides. Anyway, that's my thoughts.
And yes, the kind of ranges at the moment are sort of 100-point ranges.
Oh yeah. That drop on the Goldman was from, we were 40, 30, and we dropped all the way down. It was almost 100 points to 39.50, and then we kind of consolidated down there, and now we're right back up, Yeah. So yeah, the ranges are absolutely huge, and On any given day, like today, the overnight range is tiny. It's 20 points. That's a normal ES overnight. But, again, it's that event drivenness that these guys keep harping on. And I agree with them. It's, really have to.
I think it's really important. Yeah, I'm not saying go, multi-time frame analysis. You've really got to zoom out and see big picture and then understand where the edges of the ranges are and almost which way are we traveling within this range for the next whatever. If we bounced off the low of the range yesterday, 2 days ago, and we seem to be pointing up, there's your answer as to which way we're going until we find the other side. Yeah,
I totally agree. It's not multi-time frame analysis, but and I'm going to be talking about this a lot. I'm going to talk about it in my jigsaw session today, and I'm going to be talking about this in risk management. It's really about context and the action right now. The zooming out is to get context, and this contextual picture is complicated. There's lots of artifacts above and below us, so you have to respect that. So.
And it makes it, once you understand the context, then you can decide how you're going to trade within the context. You can just, pick off individual artifacts, or you can wait until we get to the real extremes, but you've got to understand the context.
Yeah. And there's all kinds of setups in these conditions. So you just have to be really picky about where you're going to play and how you play it. For this, again, the scalper's mentality is driving me very much toward ledges. Ledges are just really good trades, and both ways, particularly when we've got this kind of up and down momentum like we just had. NQ broke out of this range down here about an hour ago. We were like, we were just sitting along between, SD1 on both sides. And then, once we got to there and got above it, we just ripped up to SD3. And then guess what? Ripped right back down to SD1. I mean, and we just did that again a second ago. So, you really have to respect that and just be patient, let it come to you, whatever your setup is. And there are some really good opportunities on the ledges, though. I'm seeing that over and over again, almost every day for the last few months. So that's my 2 cents. Let's see, have you done any of the stuff on your screen I need to give you the screen back for?
No, I've gone through it.
Okay, let's real quickly do, so that's the economic calendar. We already talked about that.
Question from Bao there. Volume is low. Does it say anything?
I'm sorry?
So Bao has just posted, the volume is low. Does it say
let me look at it. Let's see. The volume went, that is pretty low for a Monday right now, an hour out from the open. What it says is the conclusion the hedge fund guys keep having. I totally agree with them. There's all kinds of money on the sidelines right now. Nobody's sitting in equity positions. They might be looking to buy, what they think is cheap. And then, when something happens, everybody piles into the futures with a lot of volume. And so it's not that we're seeing low volume, we're seeing inconsistent volume. And it is low right now for the morning, but on any given day, I've seen it spike really quickly or not, so it's worth watching.
We've seen that in the price action of the past week, even 2 weeks. It's almost like a pulse. It's moving backwards and forwards, ebbing and flowing, and pretty crappy volume, but it's literally like a pulse or a heartbeat. You see, 2 ticks, 2 ticks, 2 ticks, 2 ticks, and then we'll step up and we move somewhere else, and we go back to this dull plodding along.
Yeah, it's been doing tons of that. One other thing that's worthwhile, let me just bring this over. This is from my other screen, where I kind of zoom out a bit. If I go, I'm just going to go to 10 minutes here real quickly. And again, this is what I mean about getting context. This is not multiple time frames where, when they all line up, I'll take the trade. What I'm doing is I'm just looking at, so this was the day we got the Goldman. And
isn't that the Polish metro map?
Yeah, exactly. And these are just the VWAP extremes. And you can see, we got that huge sell-off, and then, it got kind of baked in. And, then we had this run up. And what I like to watch is just, the extremes from that big sell-off. Where are we relative to those, and where are we relative to the ones on Friday? And, there's a bid under the market right now. This was an earnings-driven event. And, clearly, if we get up near there again, it's going to get really interesting. And if you look at the TPO view, there's so much stuff up there that's interesting. And there's also right below us that, that conclusion and that way of thinking about it. Event-driven market, the volume is going to be on the sidelines until there's a reason for it to join, and then it's going to join, with a vengeance. And if you keep that in mind, I think that will more or less keep you, on the right side of what's happening here, if that makes sense.
Mm.
But okay, I was just reading. We're caught up on questions. There was one other thing I was going to say, and I totally forgot what it was. One other bit of context. What was it? Oh, I know what it was. I've been watching the internals really closely, and we have a pattern again there. And this was just Friday, but it's indicative of the pattern. We open, in this particular case on Friday, we opened kind of middling. The advanced decline was about plus 1,200, and then the market immediately sold off. And then as soon as we got to like parity, in other words, equal stuff going up and down, the buyers came in, and there was a bid under it the rest of the day, and that resulted in a really nice trend move. And the tick is very telling story too. We get above zero and we just stay there. And remember, the tick is just, at any instant, everything going up versus everything going down across the broad NYSE. So, if that's up, between 500 and 1,000 and doesn't want to come down, then, you really want to be careful short and look for good long entries. And so, we could certainly get going that way. And if I saw the volume picking up into a move like that, like we saw a little earlier today, only, if it kept going, we're just higher highs on more volume. That was something where I think you'll see some of the bigger funds start to play, and we'll see what happens. But I don't think we're going to get a really significant directional move as long as all these earnings reports. In fact, really, one other thing while we're talking about that, this is a really good graphic that Tom posted. So let me just show it. This one. This is a really busy week. Okay. There's all the before the opens. These are after the closes. And, look at tomorrow. Verizon, Johnson & Johnson, Lockheed, Halliburton, these are all huge names. Every day there's huge names. So be really careful in that situation. The calendar real quickly. We have a good week. We're doing the Jigsaw Dome class a little bit after the open. And I'll go through my stuff, and then if you want to jump in on what your stuff's going to be, because you've got a couple of things different this weekly. So that's Monday. Wednesday, I'm doing my Trade the Open, and then after the dojo, I'm doing Risk Management 3. Highly recommend you come to this, whether you're a scalper or not. I'm going to just expand on the first two sessions and show some interesting ways to use LRCs to manage risk. And those aren't just for scalpers. They can definitely be useful for people trading intraday swings or structure. And then Friday, we're doing the now massively popular Dino's weekly recap and my normal closing session. What's your stuff like this weekly?
It looks like we're going into market profile again on Tuesday. So quick overview of market profile. I guess single prints on Tuesday as a setup, and then we'll be doing poor high, poor low as a setup on Thursday, and we'll be talking about the dome, liquidity, MBO, etc. on Thursday as tools, and that will wrap up this month's foundational tools and setup stuff. And
then it looks like you've got office hours on Saturday.
It is. So if you have questions, get them prepared, maybe even post them in the pit so I can be prepared. And come armed with your questions on anything relating to all the foundational volume and price things. And you have me for an hour.
Yep. Good stuff.
Do we want to talk at all about the changes for next month yet?
No, let's do it.
Let's talk about them next week. Yeah, because we've got some really cool stuff coming on the calendar for next month. We added some new class ideas, and we're going to restructure a little bit how some of the current ones are done. And I think you guys will like it. So there's also going to be some more ad hocs next month. And obviously next week, I pretty much always do ad hocs for FOMC and NFP. So be prepared for that.
Indeed.
And I think, let's see, we talked about the economic calendar. I think we've covered everything.
Yeah, I think that's all of it.
I think so too. That was very efficient. 19 minutes.
Yes, it was. One other quick tip. If you are trading the overnight like I do in the early morning, if you bring up, earnings whispers or any of the earnings sites, but this one's particularly good, you can see for any given day what the major ones are, and you can also see what time they're due. Like, so for example, tomorrow there's a shit ton of them, pardon my French. Like, Johnson & Johnson is 6:25 a.m., Verizon 7:30 a.m. These are Eastern. So, that's going to be, 3 o'clock in the morning, 3:25 my time. Lockheed. And this is useful. So, I make sure I don't have, a big giant position on with, my copier copying to 9 accounts when those are hit. I get flat, I let them hit, and then I trade any sort of reaction. And the Goldman one on last Tuesday is a really good example of that. We got the bad report from Goldman. We've initially traded up a little bit. And then the market turned and just got crushed. And it was one of the best shorts because it was one of those ones where it just never looked back. You could just hop in anywhere and instantly be profitable. And, we had that massive drop. That was this here. So earnings reports can create a lot of opportunity if you're just mindful that, they can really run you over, and particularly the pre-market ones when there's no liquidity. So stay out of the way and know when they're coming.
And that's what's awkward, isn't it, with trading out of RTH, because the economic calendar, fine, but with earnings, you just don't know, and there can be a stack of them coming up, and any of them can cause a big reaction.
Yep. But typically you get one of two kinds of reactions. And again, this is more advanced, experienced trader stuff, but something to think about. And I'm going to do a lot more examples of these things in live sessions as I can and talk about them more. But this is my execution procedures. And that particular situation, earnings, same story with economic releases, but earnings is even more, like Lee said, they tend to exaggerate even more. There's two setups there. If it's like the Goldman one, where you see kind of a head fake move and then it starts going in the other way and really aggressively, whichever way it is, you just join that. And that's really uncommon, by the way. The most common reaction to these things is the knee-jerk, really sharp reaction, and then we trade right back to wherever we were, close to it. So fading those things, if you have a decent understanding of the range and you can scalp quickly, those are really good opportunities. So anyway, we'll see if we can get some live sessions of those, or at least a recording or two. I'm trying to I've got it set up so I can click a button and record really quickly to show a setup and throw it up, in the library or something. I just haven't done it yet. I have to be really fast to do it. So I'm hoping to get more of those, kind of little clips posted, going forward. Anyway, that's all I have got.
Yeah,
good stuff. All right. Good trading, everybody. And we'll see you at Jeff's class later this morning if you're there. Else, stuff in the week.
Don't try to make your week in the first hour of Monday.
No, do it in the first 5 minutes. That's more efficient.
There you
go. That's right. Much more efficient. I can't tell you how it took me years to get over that habit, because that's why the Ides of Monday. That's why I started naming it that, because I was so ready to get back to trading after the weekend that I typically made the most mistakes right at the open on Monday, and they were always the same stupid things. So beware the Ides of Monday. You have all week. Take advantage of it.
Cool.
All right.
Good trading, everybody. We'll see you
guys later.
Bye for now.